One of the major tickers that is moving, trending on the Yahoo Finance platform this morning, Intel. Intel shares sinking after its first quarter outlook falls well short of expectations. The company's forecast is a stark contrast to its competitors, NVIDIA, AMD, and Taiwan Semiconductor, which are seeing artificial intelligence demand as a major boost to growth. Intel seems to be falling behind. Joining us now for more on this, we've got Christopher Danely, who is the Citi head of U.S. Semiconductor Research. Christopher, great to have you here this morning. Chris, as you kind of think back to the tenor that was struck by this executive team last night, I mean, ultimately vastly different from what we've heard from some of the other semiconductor companies over the course of this earnings season, at least early on, and even pointing to last season as well.
Yeah, so there's two things going on with Intel. I think number one is they really don't have a quote unquote AI product that's helping obviously NVIDIA and AMD and TSMC and many other companies out there. That's coming out later. But the other is I find it ironic that the main reason they guided so poorly was their quote unquote growth businesses are not growing, and in fact they're contracting. If you look at the core business for Intel, they're PC and server microprocessors, that business is fine. It's just everything else from, the programmable logic parts, the auto business, the foundry business, that's all falling off fairly rapidly in Q1. That's what's causing the big guide down.
So, Chris, when you see the market's reaction like this, the fact that shares are selling off to the extent that they are in the pre-market, do you think that move then to the downside is justified? Sounds like it.
Yes. So I'm actually glad you asked that question. I've been getting that question from a lot of investors this morning, and I wanted to explain something. So there's two classes of investors for the market, right? There's the mutual funds like Janus or Fidelity that are like an aircraft carrier that, have large pools of money, but they move very slowly. And they're, I would say not super interested in Intel right now. But then you also have hedge funds that probably make up, half of the investing in my group in semiconductors, and they can literally get in and out of stocks in a day. And what we've seen over the last couple of months as Intel stock has spiked was a lot of interest from hedge funds. But all of a sudden, if they see something that they don't like, they're all going to get out today, and they might get back into the stock in a week or a month or something like that. But I think that the volatility today is really being caused by a lot of these hedge funds that were expecting a fairly nice guide from Intel and didn't get it. So they're going to run for the hills.
How much spending are you anticipating Intel still needs to put forward, even just to ramp up the capacity that it's going to be bringing online to produce chips?
Yeah, that's a good question. So, historically, their amount of spending relative to sales has hovered around 17%. And this is going back like 30 years. Yep, sometimes it'll go to 20, sometimes it'll go to 15. They're essentially doubling that for the next 3 or 4 years. And as a result, you're also seeing a big increase in depreciation. This is something they mentioned on the call last night. Their depreciation, which actually weighs on gross margin, is going up $2 billion this year. It's also going to go up next year. And it's also going to go up the year after that. And I think the big disappointment was not necessarily on the revenue forecast, but was on the gross margin forecast. And I think that's a direct result of all of this increased investment, which is not going away anytime soon.
Yeah, and Chris, when you take all of that into account, and we're going to be speaking with our colleague Brian Sozzi is going to be speaking with Pat in just about 2 hours from now. Pat Gelsinger, the CEO there of Intel, but he was optimistic, not exactly a surprise, on the earnings call here, saying that even though Q1 maybe is a little bit more challenging, he does expect the rest of 2024 to improve quarter by quarter. Do you agree with that sentiment? Or I guess, what do you think more specifically the next couple of quarters are going to look like here for Intel?
Sure. So yeah, Pat is the Tony Robbins of semis. He's always in a good mood. And I would say that Intel has probably the best management team out there. So we're big fans of Pat and also their CFO, Dave Zinsner. Pat has been very upfront about the amount of investment required and the trials and tribulations that the company is going to go through over the next couple of years as they make the necessary spending and take a bit of a gross margin hit. So I think from Pat's or Intel or even like a long-term investor's perspective, this is all fine. It's just you get a lot of topsy-turvy results as you're investing for the future. And I think for us, they have a bit of a two-pronged approach here. we like one of the approaches. We don't necessarily like the other approach. They're trying to get the manufacturing lead back. I think Pat has been instrumental in making progress there. The other part is they're trying to become a successful foundry. We actually do not think that that's going to work.
Just how much exposure do you believe that Intel also still carries as a result of some of the EV, not total drawdown, but at least some of the ambitions that we've seen from the big three automakers here, especially kind of pulling back on production in the near term?
Yeah, good question. So Intel's auto business, which essentially is mostly a company called Mobileye, and then they also have some processors, is really only about 4 or 5% of revenue. It's fairly small, but Mobileye negatively pre-announced, and it's going to take a pretty big drop in Q1. So that's going to be a couple of $100 million. It's a couple percent, literally off of their Q1. So that hurts. But again, in terms of the grand scheme of things, core processing is still 75% of Intel. PC chips for desktop, notebook, server. That's, in our opinion, that's what's really going to drive the company. And that's where they need to get the manufacturing right to, in our opinion, really add to long-term value.
All right, Chris, we always appreciate your insight. Thanks so much for hopping on with us and breaking down these results. Again, a ton of pressure on Intel stock here ahead of the open, with shares selling off on those lackluster reports. And like we mentioned a few times here, keep it locked in on Yahoo Finance, because Brian Sozzi will be speaking with Intel CEO Pat Gelsinger. That's happening at 11:35 a.m. Eastern time this morning.